So there seems to be this notion out there in the stock market investing community that Bitcoin mining stocks are only supposed to be traded short term, and if you want to hold them long term, you're making a big mistake, you're going to lose all your money, and you're going to regret everything. I, for one, actually disagree with this. I've mentioned this several times on YouTube as well as on X when speaking in spaces, that I'm investing in Bitcoin mining stocks for the long term. People look at me like I'm stupid and I don't know what I'm doing, and maybe I don't, and maybe I'll be wrong, but in today's video, I promise to explain to you my thinking behind this, why I choose to hold these stocks instead of trying to trade in and out of them, timing the tops and bottoms. Yesterday, I sent out this tweet. Everybody is convinced that Bitcoin miners should be traded, not held. When the masses believe one thing, the opposite is usually true. If you rely on past performance to decide what the future may look like, you will fail as an investor. That little paragraph right there gives us a good backbone for this video. But I promise, as I mentioned in this tweet as well, that I'm going to go much more in depth into this topic today. But first, if you're new here or returning and not yet subscribed, please subscribe down below. We're one of the fastest growing stock market YouTube channels out there, and that's entirely thanks to you guys that watch my videos. I have an amazing community. I'm eternally blessed. And lastly, I have people that ask me all the time how they can get access to additional content from me or my buy and sell alerts, etc., etc. You can do that by joining the membership down below. Hit the join button located right next to the subscribe button, or hit my Patreon link in the pinned comment. I'm entirely self-funded. I will always remain independent, so your support means a great deal to me, and I have a 100% refund policy if you don't find value, and I've yet to have to refund anybody, so let that speak for itself. But anyways, let's go ahead and jump into this. I think a lot of the reason people believe you can only trade Bitcoin mining stocks and you can't hold them long term is because we're still pretty fresh from this 2022 bear market cycle that destroyed a lot of our portfolios, myself included, where the Bitcoin miner index, this includes Bitfarms, Cypher Mining, CleanSpark, Hive, Hut, Marathon, and Riot, was down 94%. So on average, even the best in-class Bitcoin mining stocks were down 94%. This compares to Bitcoin's negative 75% return during the 2022 bear market. But as I've already mentioned, I think this is a big mistake to look at past performance to decide what future performance is going to look like. Investors have made this mistake countless times in the stock market. For the hundreds of years the stock market has been a thing. They look at previous price action and say, okay, because this happened in the past, it's going to happen again in the future, and I'm going to base my investing decisions around it. I got a couple responses to that tweet I put out. One that said, that's not how a contrarian approach works. Miners correct with 50% plus, why would I hold through? And then my man Brody said, you shouldn't hold Bitcoin miners just like you shouldn't hold gold miners. They are leveraged plays on the underlying asset. Buy them when they're cheap and sell them when they're overvalued, and buy the underlying asset. So both individuals here are actually correct. Bitcoin miners have always been a leveraged play to the underlying Bitcoin. If Bitcoin performs well, the Bitcoin mining stocks perform even better, and usually by a wide margin. And if Bitcoin itself performs poorly, like I just showed you in the 2022 bear market, the Bitcoin mining stocks do even worse. The most extreme bull market that we've seen over the past 5 years obviously was coming out of the Great Virus Crisis. And during that time period, the Bitcoin miner index went up 5,100% in comparison to Bitcoin's 1,200% return, which is still great return for over the course of what, 1.5 years? Absolutely incredible return here for the Bitcoin mining stocks and Bitcoin itself. So I don't want to dismiss the fact, the known fact that these are leveraged plays to Bitcoin. But what we also need to focus on is what is different this time compared to the past, compared to the 2020 and 2021 bull cycle, and compared to the 2022 bear market. To help me explain my thoughts here, I want to pull up on the screen this S-curve, which usually is the path that new technologies follow. The very first step in any new technology is that technology emerging and starting to grow. The next phase is growth, and then comes maturity, and then comes saturation. With Bitcoin right now, I believe that we're either at the end of the emerging phase or just at the beginning in the first half of the growth phase. Bitcoin adoption is still very young. Most people out there don't use the blockchain. That is going to grow. More and more transactions are going to happen on the Bitcoin blockchain. This is an emerging technology. We're definitely not maturing as a Bitcoin technology. And that's what I want to get get at, especially in the emerging phase of any new technology. That's when you have bankruptcies, that's when you have scams, that's when you have frauds, because the industry is so young and we're so early on the learning curve. Just like there's an S curve for new technology, there's a learning curve for new technology. I mean, let's just look at all the bankruptcies that happened alone in 2022. We had Genesis Global, we had FTX, we had BlockFi, we had Celsius, we had Voyager Digital and Three Arrows Capital, we had Gemini Trust. And that's not even getting into the Bitcoin mining host providers like Compute North that went bankrupt because they guaranteed 99% uptime to their hosting clients. But then energy prices soared, so they were guaranteeing uptime while they were losing money on that uptime because their energy costs were higher than they were when they signed that contract. And unfortunately, it might not be fun, but this is the reality of any new technology. But I think it's safe to say that we are advancing. Those bad debt deals of the past that caused crypto brokerages and crypto mining companies and crypto hosting companies to go bankrupt in the past, those sorts of deals are not going to be signed ever again because the industry has learned. So just in that alone, the industry is getting more stability because there's more knowledge about how businesses operate and how businesses work and how the trends in the industry happen. Another thing telling us that we're really young in the overall adoption and the S curve of Bitcoin is the fact that institutional capital is still very limited with Bitcoin. There isn't that much institutional capital that has come into this space yet. Eventually that will change as the technology advances and grows and reaches that point of maturity and eventually saturation. Until that point though, more and more billionaires, more and more countries, more and more companies are going to keep buying Bitcoin and slowly adopting this technology. As that happens, that significantly lifts the floor of Bitcoin's price. It's the same thing. The industry and the technology matures, and as a result, people have more confidence in it, which means that the price should have a higher floor than before. So yes, Bitcoin mining companies are leveraged to Bitcoin, but if Bitcoin's drawdowns keep getting shallower and shallower and shallower, these drawdowns in the Bitcoin mining stocks are too going to be shallower and shallower and shallower, which raises the risk when you try and sell out of these stocks that you're going to miss out on the bottom, or you're gonna miss out on buying back in if you try and time things out. And you don't want to miss out on a new technology like Bitcoin that theoretically has unlimited upside. A lot of very smart people think Bitcoin by 2030, so over the next 6 years, is going to hit $1 million per Bitcoin. If that happens, regardless of what happens between now and then, if it gets to $1 million per Bitcoin, the Bitcoin mining stocks are going to perform admirably for investors, and they likely will be the best performing stocks of the decade. So is it smart to look at the one previous bear market we have and say because miners went down 95%, they're going to do it again in the future? It's probably not smart to do that. And that's also what I hear a lot of people talk about, that Bitcoin mining stocks are way too expensive relative to traditional valuation methodology. Well, while that's true, there is a chance here that traditional valuation methodology is going to be inaccurate if you're trying to apply it to this sector and to this industry, because we've never had an asset like Bitcoin ever before. So when investors and when Wall Street are placing premiums on these companies, it's for good reason. And it's because it's actually safer to value these companies with some sort of premium, because it's much more likely that Bitcoin is going to move parabolically up at this point than it is for Bitcoin to move parabolically down at this point. So naturally, there's going to be a premium associated with these companies. And the reason I said when the masses believe one thing, the opposite is usually true, is because that is how contrarian investing works. If the masses believe that Bitcoin mining stocks should only be traded short term and nobody should hold on to them long term, it's going to be impossible for Bitcoin mining stocks to become overvalued over a long period of time, because the masses are always going to be skeptical. And if the masses are always skeptical, you're always going to have people selling out. And if they're selling out, it puts a limit on the valuations of these companies. And if Bitcoin continues to go up, and has a higher floor, the long-term trend for Bitcoin mining stocks will also be up and to the right. And if you haven't heard me discuss this in the past, get ready, because this is like my biggest gripe with this industry and all these crypto bros on X and on social media that say Bitcoin cycles are perfectly predictable. No, they're not. If you hear people telling you that the Bitcoin cycle is perfectly predictable, and based on this chart and based on how it performed in the past, this is what's going to happen for Bitcoin this cycle, I would unfollow them immediately, because they clearly do not understand how markets work. If you really believe you have an edge on the rest of the market because Bitcoin is perfectly predictable, you are sorely mistaken. You're not the only person that sees that edge. Everybody else sees the same edge. You know what happens? They front run that price action. They try and time out buying the perfect bottom based on what their indicators are telling them. And they plan on selling out at the perfect top based on what their indicators are telling them. Well, in front running the price action, it actually renders this perfectly unpredictable. And this has been proven by the fact this is the first cycle Bitcoin has hit a new all-time high prior to the halving event. People are crapping their pants now. Oh, I don't know what to do because this wasn't supposed to happen. And that's really the problem with the rest of what Brody said, with buying them when they're cheap and selling them when they're overvalued. Good luck trying to time that out. What determines when a Bitcoin mining stock is overvalued versus too cheap? And what guarantees to you that the markets are going to remain rational and not continue on with the irrational exuberance, sending these stocks higher and higher and higher? This is why timing the markets never works out for anybody. It is impossible. And if you think you can accomplish it with trading Bitcoin mining stocks, I have a bridge to sell you. And while it's pretty much a guarantee that Bitcoin will have another bear market in the future, again, I think the downside for Bitcoin mining stocks is going to remain really subdued. It's going to get shallower and shallower as we continue along this learning curve in the industry, and as Bitcoin continues to advance, and as more institutional capital comes into this space. And at this point, what would cause a Bitcoin bear market except something that happens in the macro economy? And if something in the macro economy does happen, well, it's not just going to be Bitcoin that goes down significantly. It's going to be the whole stock market that comes down significantly. It's not just going to be Bitcoin mining stocks. It's going to be electric vehicle stocks. It's going to be every single asset class in the stock market, more than likely, with the exception of a few, that come down significantly. So in the future, what's the difference between Bitcoin mining stocks coming down during bear markets and other stocks coming down in bear markets? So far in 2024, there's only been one Bitcoin mining stock that has outperformed Bitcoin. This is for a variety of reasons. I've talked about it on the channel in the past. You can go watch my previous live streams. I'll leave a link to the playlist of them in the description down below. You can go watch that, but that's besides the point. Post-halving, which is projected to happen in 16 or 17 days at this point, I think Bitcoin mining stocks are going to rip some faces off because nobody is ready for it. Outside of this tight-knit community that talks about Bitcoin mining stocks every single day, there are very few other investors out there that are interested in or are buying Bitcoin mining stocks. Largely, this has been old investors just buying more or buying new shares rather than new investors to the space initiating their first positions. But I can almost promise you, as Bitcoin breaks out well above its previous all-time high and approaches $100,000 per coin, more and more people are going to become interested in Bitcoin and the technology, and they're going to invest their capital in it. Most people are doubting the Bitcoin miners, and that's evident by their price action this year outside of just 2 or 3 of the Bitcoin mining companies, including CleanSpark, including Cypher Mining, including TeraWulf, and maybe even Core Scientific. Clearly, this Bitcoin halving event is causing fear, uncertainty, and doubt. But let's go back to the unit economics of why it's attractive to invest into these companies. First of all, we can look at this, the average Bitcoin miner production costs post-halving versus the price of Bitcoin. Obviously, this chart was made a couple weeks ago. Bitcoin's price has come down a little bit, but still, the average all-in production cost to mine Bitcoin for these companies is $42,500. That compares to $65,000, $66,000 per Bitcoin currently. That is tremendous return on invested capital. Another way to put this is these mining companies are acquiring Bitcoin for $42,500 when the rest of the market is having to pay $65,000 or $66,000. They're getting a significant discount by mining the Bitcoin. And I do want to mention this. I'll give credit to Barlow Investing here. This is a very good point. I don't want to dive into the weeds now because this is much more 5 to 10 years down the road in my personal opinion, but nobody is pricing in the fact that if Bitcoin's blockchain technology really takes a foothold in our economy, we're going to have the Visas and the MasterCards of the Bitcoin blockchain. You know who those individuals and participants will be? It's going to be the Bitcoin mining stocks. The transaction fees are a whole other aspect of Bitcoin mining that most people aren't even aware of. With every single Bitcoin blockchain transaction, you have to pay a transaction fee. That transaction fee goes straight to the Bitcoin miners. Bitcoin mining always has to be profitable because the blockchain needs to be secure. If the blockchain isn't secure, Bitcoin fails as a technology. So everything with Bitcoin is predicated on the fact that it has to be profitable enough for enough participants to secure the blockchain. If it starts to become too unprofitable, difficulty adjustments take place, decreasing the difficulty to mine blocks on the Bitcoin blockchain. Or transaction fees go up as more and more people start to use the blockchain. And then to finish this video out, I want to make one last point when it comes to the scams and the frauds of the industry. As the technology advances, less and less scams and frauds and bankruptcies are going to happen. What does that do? It leads to more trust in the space. Trust has been lacking in this space ever since it became a thing. Once that changes, again, it's another catalyst that increases the floor of Bitcoin because more and more people trust it. So they're not going to be so quick to sell out of their Bitcoin or sell out of their Bitcoin mining stocks when something bad happens in the economy or when something negative hits the newswire. The fact of the matter is there is still very little institutional capital in this space, which is just another catalyst we could talk about. Between the 11 US spot Bitcoin ETFs, there are basically $59 billion of assets under management, which sounds like a lot, but that number could grow towards $1 trillion as the years progress. You also have the London Stock Exchange saying they're going to start accepting applications for Bitcoin and Ethereum spot ETFs. Well, that's just another catalyst, more institutional capital from around the world that's going to be coming into Bitcoin. You had the Hong Kong Stock Exchange receive their second spot Bitcoin ETF approval. More institutional capital that's going to come into the space. So I guess my point in this video is I hope you realize that in the past, this has been a very young industry. It still is very young, but we're progressing, we're learning, and as a result of that, the floor of Bitcoin is going to go up. The floor of Bitcoin mining stocks is going to go up. And I don't personally think we will ever see more than a 90% decline in Bitcoin mining stocks as a result of this. This technology is going to become more stable and less volatile along with the price of Bitcoin. So if you're somebody that wants to try and time the tops and bottoms every single day or every single week or every single month or try and time the Bitcoin cycles, I just have to say to you, good luck. You're going to get burned. It is quite simply impossible to perfectly time stocks and perfectly time investments because to perfectly time something, you also have to assume that it's going to trade perfectly rationally. That's never the case. And I hope after 2021 happened that everybody can recognize that irrational exuberance can go a long, long ways. And even if you think something's overvalued, it doesn't mean other people think something's overvalued. So it's just not something I'm willing to risk. I don't want to risk losing my investment in CleanSpark, for example, or losing my investment in Bitcoin because I think I can time this out perfectly. I have been there, done that, and I have gotten burned. I don't ever want to do that again. And ultimately, the risk of missing out on thousands of percent return in these Bitcoin mining stocks means so much more to me than the risk of losing 90% again. Because if that happens, I just get to buy more and increase my exposure even more to this technology that I believe in for the long term. But with that, I hope you guys enjoyed this video. If you did, hit that like button for me and comment down below your thoughts on this issue. I'm not saying I'm correct with everything I've said today. I'm open to everybody's opinions and interpretations. It helps me come up with a better opinion and conclusion for myself. But yeah, if you're new here or returning and not yet subscribed, please subscribe down below. Feel free to check out my membership. It's the cheapest one on YouTube, and I guarantee you're going to find enough value in it. And if you don't, I'll 100% refund you. But with that, I hope you have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.